Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down today. Dow Jones is down 0.5%, Nasdaq is down 0.2%, S&P 500 down 0.4%, Russell 3000 is up 0.3%. Oil prices are down below $62 per barrel. That's almost a $2 per barrel drop, or 3%. Yield curve is down substantially today based on the employment numbers. We're going to talk about that. 10-year Treasury yield is down 10 basis points to 4.08. Heat map shows Microsoft, Nvidia down 2-3%, Apple flat, Amazon down 1%, Tesla is up 3%, Broadcom is up 11%. We're going to talk about the news Broadcom talked about. Financials are down 2-3% across the board. Oil stocks are down as we would expect, and everything else is mixed. Wall Street retreats from record highs as slowdown fears cloud rate cut optimism. The major U.S. indices pulled back from record intraday peaks hit earlier this Friday after weaker than expected August jobs data stoked worries of an economic slowdown and dampened some of the optimism around potential Federal Reserve rate cuts. Data show the United States economy created only 22,000 jobs last month compared to an estimate of 75,000 additions, confirming softening labor market conditions. Traders of the futures tied to the Fed policy rate added to bets that U.S. Central Bank will trim rates in quick succession starting this month, with a jumbo 50 basis point reduction now on the table. Traders now see a 12% chance of a 50 basis point cut this month, a stark change from no such bets a month ago, CME's FedWatch tool showed. This is more of a recessionary jobs report than not. If they're the Fed cutting in response to a weakened labor market, that is initially not a bullish setup for the stock market, said Kevin Gordon, senior investment strategist at Charles Schwab. Economically sensitive sectors bore the brunt of the decline, with banks falling 2.3%, energy dropping 2%, and industrials shedding 1%. BofA Global Research also adjusted its outlook following the report, forecasting 1/4 point cut each September and December. The three major U.S. stock indices scaled fresh peaks early in the session, but the gains petered out as economic concerns set in. Broadcom was in a bright spot, surging 9% to a record high and lifting the Philadelphia SE Semiconductor Index 1% after the chip designer forecast fourth quarter revenue above estimates and expected AI revenue growth to improve significantly in fiscal year 2026. Investors have lately been concerned about the lofty valuations of AI-linked firms that briefly paused Wall Street's rally in August. Rising rate cut bets helped drive the real estate sector up 0.7%, while the Philadelphia Housing Index climbed 2% to an 8-month high. The S&P 500 and Nasdaq were on track for weekly gains, despite September being a bad month historically for U.S. equities. The Dow looked set for weekly declines. Investors will be on the watch for consumer prices data due next week. A 50 basis point cut was not firmly on the table unless markets get more clarity on inflation, Gordon said. Tesla rose 2.8% after the EV maker proposed an about $1 trillion compensation package for Elon Musk pegged to lofty performance targets. Lululemon Athletica plunged 18% to a more than 5-year low after the yoga wear maker slashed its annual profit forecast the second time in a row, dragging larger rival Nike down 1.6%. Advancing issues outnumbered decliners by 1.5 to 1 on the NYSE and by 1.1 to 1 on Nasdaq. Let's talk about Nvidia. Nvidia stock falls as Broadcom lands a $10 billion AI chip deal. Nvidia is one of the top 10 mega cap stocks that hedge funds hold. Seaport analyst Jay Goldberg remains skeptical of Nvidia Corporation maintaining a sell rating and a street low price target of $100 per share. While most analysts stayed bullish after Nvidia's Q2 fiscal year 2026, Goldberg flagged the company's slowing data center growth as a red flag, just 6% sequentially, quarter on quarter, its weakest pace since the AI boom began. He also noted that compute revenue actually declined 1%, even with the full launch of Blackwell GPUs. Goldberg criticized NVIDIA's vague growth narratives like agentic AI, calling them more hype than substance. He also warned that US China trade issues could delay shipments, giving rivals time to catch up. However, the rest of Wall Street remains bullish on the stock, with 47 of 65 Wall Street firms tracking it rating a strong buy and 11 a buy, while 6 rated a hold. While the company's growth rate may be decelerating, it is still growing at a ridiculous pace for a company of its size. On a year on year basis, the company's revenue jumped 55.5% to 46.74 billion. However, Goldberg pointed out that the revenue grew only 6% sequentially, which is still a robust 26.64% on an annualized basis. The company's margin continued to improve from the high watermark it set in Q4 of the previous fiscal year. The net margin in Q2 stood at 56.53%, beating Q4's 56.17%. The company's net margin for Q1 was affected by inventory write-offs in China, but was still at a healthy 42.61%. The fact that the company can charge such high premiums shows a clout it has among big tech hyperscalers. While we acknowledge the potential of NVIDIA to grow, our conviction lies in the belief that some AI stocks could hold greater promise for delivering higher returns and have limited downside risk. I'm going to write an article on NVIDIA this weekend and publish it early next week. And I'll be more detailed in this article. Lululemon cuts forecasts, blames tariffs and product issues. Lululemon Athletica slashed its annual profit forecast for the second quarter in a row, blaming weak U.S. business and product issues as well as tariff costs. Shares of the yoga wear maker, which also cut its annual sales forecast, fell about 15% after the closing bell. The company's attempts to boost sales and fight competition with weekly product launches have failed to spark a wave of buying from shoppers as it steps into the holiday-focused second half of the year. Once a trailblazer in athleisure, Lululemon has lost its innovation edge, now squeezed by luxury newcomers like Alo Yoga and private label dupes with comparable fabric tech at lower prices, said Susie Devikanan, analyst at eMarketer. Copycat culture highlights how far the moat has shrunk. Lululemon struggles with merchandise management, including a heavier focus on its ailing products like the lounge and social wear, and its failure to effectively tap into seasonal trends have caused its American shoppers to turn away. While we continue to see positive momentum overall in our international regions, we are disappointed with our U.S. business results and aspects of our product execution, said CEO Calvin McDonald in a statement. We have let our product life cycles run too long within many of our core categories, McDonald added on a post-earnings call. The dour forecast comes as U.S. holiday spending is expected to see its steepest drop since the pandemic, according to a PwC survey. The company, including mitigation efforts, expects an impact of about $240 million on its 2025 gross profit from higher tariffs and the removal of the de minimis exemption. It sees a hit of around $320 million on its operating margin in 2026. Wow. De minimis is a U.S. customs exemption that allows duty-free entry and minimal paperwork for international shipments under $800. The exemption removal became effective on August 29. Lululemon fulfills about 2/3 of its U.S. e-commerce orders and used the exemption through distribution centers in Canada, it said in the earnings call. The company now expects annual revenue between $10.85 billion and $11 billion, compared to its previous outlook of $11.15 billion to $11.3 billion. And that's a major drop, especially after another revision. Annual profit per share is now expected between 12.77 and 12.97, compared with previous expectations of 14.58 to 14.78 apiece. Yeah. Lululemon is sticking to its plan to take strategic price hikes in the U.S. market to reduce the tariff impact, even as it increases markdowns overall to clear inventory. The company relied on U.S. import tariff hotspots, Vietnam and mainland China, for 40% of its manufacturing and 28% of its fabrics, respectively, as of 2024. Revenue for the second quarter, ended August 3, rose 7% to $2.53 billion, largely in line with analyst expectations, while earnings per share of $3.10 beat estimates of $2.88, according to data compiled by LSEG. Comparable sales for America's segment declined 1%, while international sales rose 15%. Okay. Let's look into an energy company, Halliburton. Halliburton reduces workforce as oil activity slumps, sources say. U.S. oil field services provider Halliburton has been cutting staff in recent weeks, according to two sources familiar with the matter, marking the latest workforce reduction in the U.S. oil industry as it faces rising costs and a period of lower prices and volatility. Global benchmark Brent crude oil prices have dropped more than 10% this year amid uncertainty over global trade policies and as the OPEC and allies raise output. U.S. oil company ConocoPhillips this week announced it would cut up to 25% of its staff to reduce costs. The scope of Halliburton's layoffs was not immediately clear. Halliburton has rolled out the cuts over several weeks, according to the sources, who were directly involved in layoffs but not authorized to speak publicly. At least three business divisions had lost between 20 and 40% of employees, the sources said. Halliburton, the third largest global oil field services company by revenue, did not respond to a request for comment. Oil field services companies provide technical expertise, equipment, and labor, including drilling, to support oil and gas exploration and production. Houston, Texas-based Halliburton had 48,395 employees at the end of 2024, according to its latest annual report. The company in June said it expected a sharp decline in full-year revenue as it warned of lower activity in the oil and gas sector. It posted a 33% fall in the second quarter profit this year amid weaker demand. On a conference call with analysts after reporting second quarter earnings, CEO Jeff Miller noted the oil field services market appeared very different than it did 90 days ago, citing a slowdown in North America and among large national oil companies elsewhere. To put it plainly, what I see tells me the oil field services market will be softer than I previously expected over the short to medium term, he said. Brent crude was trading below $66 on Friday, down nearly 20% from this year's peak of north of $82 in mid-January, as investors brace for OPEC Plus group's meeting on Sunday. Reuters earlier reported the group will consider raising output further at that meeting. Now let's switch to the jobs report that came out this morning. Jobs slowdown seals Fed rate cut as White House criticizes Powell for not acting sooner. A weak jobs report released Friday likely sealed an interest rate cut at the Fed next policy meeting later this month. In 2 weeks, actually. As the Trump administration once again stepped up its criticisms of central bank chair Jerome Powell for not acting sooner. I'm going to skip the nonsense. Let's see if there's anything. We already talked about that. A new labor report on Friday backed up the view economy added 22,000 jobs in August, weaker than the 75,000 economists expected, with the unemployment rate rising to 4.3% from 4.2%. Job growth for June was revised into negative territory to 13,000 jobs, while July showed below-trend growth compared with the past year, marking 3 months of slowing job growth. Several Fed watchers said the numbers lock in a cut this month. Investors agreed, sending the odds of a cut this month meeting to 99%. The question of a cut is no question. There's going to be a cut. Leslie Falcuno, UBS Global Wealth Management's head of taxable fixed income strategy, told Yahoo Finance. The question, she said, is whether it's a dovish cut or a hawkish cut, and how Powell talks about the next several months. EY chief economist Greg Dacko said he's sticking with his view of a small cut this month, but the real question is what it does after that for the remaining 2 meetings of 2025 and then 2026. The White House has been hammering Powell and Fed for months now to ease monetary policy. All right. Moving on to the next one. Let's dig a little deeper into the jobs report. Labor market continues dramatic summer slowdown in August. The August jobs report released Friday. We already talked about that. Let me see if there's any detail here that we need to highlight. Average hourly earnings rose 0.3% over past month and 3.7% over the prior year in August. Wall Street expected hourly earnings to have increased 0.3, so it's in line with expectations. August employment report confirmed that the labor market has headed off a cliff edge. Capital Economics North America economist Bradley Saunders wrote in a report on Friday. Friday's report follows data out Thursday from private payroll provider ADP showing 54,000 private sector jobs were created last month. Data from the Labor Department showed initial filings for unemployment insurance tallied 237,000 last week, the most since June. By industry, Friday's report showed that education and health services were the largest job creators, adding 46,000 employees during the month. Losses were sharpest in the durable goods and business services industries, where 19,000 and 17,000 jobs, respectively, were lost in August. The government sector lost 16,000 jobs in August. Okay, we talked about the rest. Let's read the summary on this one. Fed Governor Cook says Harvard funding fight shows Trump hidden motives. Federal Reserve Governor Lisa Cook argues that President Trump's attempt to fire her over alleged mortgage fraud is a pretext for his real motive, controlling the Fed to lower interest rates. Cook's attorney cites a recent ruling in Harvard's favor, which found the Trump administration used anti-Semitism as a smokescreen for an ideologically motivated assault on the university. Cook's case is pending a ruling from U.S. District Judge Gia Cobb. All right, let's read the detail on this one. I'm curious about this. Federal Reserve Governor Lisa Cook said a ruling in favor of Harvard University this week in its funding battle with the U.S. backs her argument that President Donald Trump's attempt to her fire over alleged mortgage fraud is a pretext, cloaking an ulterior motive. In a court filing late Thursday, Cook compared the lawsuit she filed to prevent her ouster by the president to Harvard's suit alleging the freezing of more than $2 billion in research funding. The judge in Harvard case ruled September 3 that the funding freeze was illegal and that the Trump administration, quote, used anti-Semitism as a smokescreen for a targeted, ideologically motivated assault, end quote, on the university. Wow. In the filing, Cook's attorney, Abby Lowell, urged the judge to take a page from the Harvard ruling and weigh Trump's public statement and social media posts as evidence that the fraud claims against her disguised Trump's real agenda, taking control of the Fed to lower interest rates. That same smokescreen, using concocted allegations of mortgage fraud to find a basis to remove a governor over policy disagreements and now claim cause, is evident in President Trump's and other public official statements in the record, Lowell said. All right, they're coming out swinging. I also noticed that there's a bit of a backtracking going on, I think, on the administration side about this issue. So it's going to be interesting to see how it plays out. Cook made the argument in Washington in support of her request for a temporary order blocking Trump from firing her while she sues to keep her job. U.S. District Judge Gia Cobb is expected to rule soon on her request. The expected ruling, though temporary, may have far-reaching consequences because it could determine if Cook is still on the job when the Fed debates a possible rate cut at a meeting later this month. The White House didn't immediately respond to her request for comment. In her filing, Cook argues the Harvard ruling exposes the transparent two-step used by the Trump administration, where the president makes ideologically driven statements before taking illegal action and then claims later in court that he had a legitimate motive. Trump's public statements demanding that the Fed lower interest rates, urging Chairman Powell to resign, and touting the fact that he will soon have a majority on the board are flatly inconsistent with the government's position that Trump's basis for ousting Cook was alleged mortgage fraud. Yeah, I think that's fair. Treasury Secretary Bessent calls for an entire review of the Fed. U.S. Treasury Secretary Scott Bessent on Friday called for renewed scrutiny on the Fed, including its power to set interest rates, as the Trump administration continues its effort to exert control over a central bank whose insulation from short-term political pressures is widely seen as a key to its effectiveness. Quote, There must also be an honest, independent, nonpartisan review of the entire institution, including monetary policy, regulation, communication, staffing, and research, Besson wrote in the Wall Street Journal, calling for the Fed to leave bank supervision to other governmental authorities and to scale back the distortions it causes in the economy, including by bond purchases made outside of true crisis conditions. Interesting. Back to chips, and now we're going to talk about Tesla and X. AMD stock slips as analyst warns of slowing AI orders. No shit. Advanced Micro Devices slipped about 6% on Friday after a round of analyst updates created mixed sentiment around the chipmaker. Seaport Global's Jay Goldberg shifted AMD to a hold rating from buy, pointing to supply chain checks that signaled slowing demand for the company's AI accelerator business. At the same time, Citi's Christopher Danely reiterated a hold with a $180 target, while Bank of America's Vivek Arya maintained a buy rating and a $200 target, implying nearly 25% upside. The analyst coverage arrives as US-China trade tensions continue to weigh on the semiconductor sector. A new policy requires AMD and rival NVIDIA to direct 15% China revenue to the US government. Intel also faces the same mandate as it navigates its restructuring efforts. Despite Thursday's decline, AMD shares remain up more than 32% year to date, supported by optimism over its MI355 AI chip and EPYC server processors. Wall Street's consensus still calls AMD a moderate buy with an average target of $185, suggesting a 15% potential upside. Interesting. Pointing to supply chain checks that signal slowing demand for the company's AI accelerator business. Okay. Tesla. Tesla offers mammoth $1 trillion pay package to Musk, sets lofty targets. Tesla board has proposed a $1 trillion compensation plan for CEO Elon Musk in what would be the largest corporate pay package in history, underscoring the hold Musk has over the car maker as it attempts to transform into an AI and robotics powerhouse. The world's richest person has consistently asked for a bigger stake in the company to gain more control, even as a legal battle over his 2018 pay package, then valued at a mere $56 billion, continues. The newly proposed award is roughly 18 times the size of the contested plan and is close to the company's current market valuation. The proposal highlights the board's confidence in Musk's ability to steer the company in a new direction while reigniting growth, even as it loses ground to Chinese rivals in key markets amid softening EV demand. While bold compensation tied to performance is nothing new, the sheer scale here sets a new bar for CEO incentives and will dominate boardroom debates everywhere, said Adam Sarhan, chief executive of 50 Park Investments in New York. The regulatory filing puts Musk on a different plane than other technology executives, saying that, quote, traditional compensation packages granted to executives at other companies were determined to not be appropriate for designing Mr. Musk's incentive compensation, end quote. Musk transformed Tesla from a niche EV startup into the world's most valuable automaker, scaling production, expanding globally, and pushing the industry toward electric mobility, while running several other companies, including SpaceX and XAI. Tesla's board says the record award is needed to keep Musk focused and incentivized, but critics argue that the company's largest shareholder, he already has ample motivation, and the plan could worsen dilution and pose governance risks. The board also said the new award could lift his stake significantly if all targets were met, giving him even greater control as Tesla seeks to become the world's most valuable company. The comp plan does not impose conditions on how much time he must devote to Tesla. Quote, this is a ridiculously large pay package. It raised lots of questions, but last year, Musk moved Tesla from Delaware to Texas in order to avoid all those questions, said Brian Quinn, professor at Boston College Law School. Given that Tesla's stock price is basically all vibes and appears to have very little to do with the automaker's actual performance, I suspect they will approve this package, end quote, he says. Details. The proposed plan would grant Musk up to 12% of Tesla's stock worth about $1.03 trillion if the company hits its target market value of $8.6 trillion. The plan requires boosting Tesla's valuation nearly eightfold, or about $7.5 trillion over the next decade. Musk had said that Optimus humanoid robots might eventually account for about 80% of Tesla's value and predicted they could help make the company worth $25 trillion. If fully earned, the award would materially increase Musk's voting power from his roughly 13% stake, intensifying debate over governance and successions. The board said the award would vest in tranches tied to both market cap and operational milestones, such as mass production of robotaxis and humanoid robots. Tesla emphasized that Musk would receive no salary or cash bonus, with all comp linked to performance, echoing the structural 2018 plan. Tesla's board earlier this year approved an interim compensation package for Musk worth about $29 billion in restricted stock, designed to keep him at the helm through at least 2030 as the company pivots to an AI-first strategy. Tesla has reincorporated in Texas and is appealing the Delaware ruling, but the company said the new plan reflects shareholder feedback and stronger governance safeguards. The filing also disclosed that a special committee of independent directors reviewed the proposal, which will go to a shareholder vote in November. Politics cloud focus. Musk's foray into party politics and his willingness to challenge President Trump has heightened concerns about Tesla investors and analysts about potential distractions, and had previously fueled talk about looking for a new chief. In July, Musk announced plans to launch a third political party, the America Party, following a public clash with Trump over a tax cut and government spending bill. Tesla's board has urged shareholders to vote against the proposal, calling for a political neutrality policy, which would have expanded board oversight of Musk's political activities. That's amazing. That's amazing. It really seems what Elon wants, Elon gets from the board and from his shareholders, said Douglas Chia, president of Soundboard Governance, an independent corporate governance consulting firm. As ridiculous as it is, they'll pass it, I have no doubt. Yeah. Yeah, that's amazing. X is now offering me end-to-end encrypted chat. You probably shouldn't trust it yet, says the author, Lorenzo Franceschi Bichuera. X, formerly Twitter, has started rolling out its encrypted messaging feature called Chat or XChat. The company claims the new communication feature is end-to-end encrypted, meaning messages exchanged can only be read by the sender and their receiver, and in theory, no one else, including X, can access them. Bullshit. Cryptography experts, however, are warning that X's current implementation of encryption in XChat should not be trusted. Not surprising. They're saying it's far worse than Signal, a technology widely considered the state of the art when it comes to end-to-end encrypted chat. In XChat, once a user clicks on Setup Now, X prompts them to create a 4-digit PIN, which will be used to encrypt the user's private key. This key is then stored on X's servers. The private key is essentially a secret cryptographic key assigned to each user, serving. I'm not going to read this. This is just bullshit. All right. On that note, thank you very much, everybody. Enjoy your weekends, and I'll chat with you all on Monday. Take care.